Boy, that time flies when you're having fun. It's about that time of day again here, folks. My name is Joseph James. It's Thursday evening, January 3rd. Welcome back to your nightly newsletter. I help new traders just like you earn consistent profits using a simple three-step trading strategy, and we execute the strategy every day together in our trade room. And my plan tonight is to identify the best opportunities setting up for tomorrow's trading session. And I'm covering crude oil, S&P, Nasdaq, gold, and euro in this evening's video. Crude is bullish and trading in the middle of a triangle tonight, which makes my job pretty easy for tomorrow. Looking for buying opportunities using seller failures below the range low tomorrow. The S&P is bearish with a strong channel going lower, which tells me to look for a two-try failure pattern to sell into those bull breakouts as we go to the high of a hidden channel tomorrow. Nasdaq is bearish with a wide, almost flat channel tonight on the chart, and that tells me to treat this market just like a range, buying low, selling high, and focusing on failures. Gold is bullish with a strong push higher to finish today's session, so I'm looking for buying opportunities, and I've got my eye on the low of a hidden channel tomorrow. And we're going to wrap up tonight on the euro. The euro is bullish, and I'm looking for buying opportunities at some key support levels, and we got to hurry because we're headed back to that 15,000 big round number we talked about in last night's newsletter. We're back in the action tonight, this time getting prepped up for a busy Friday session. We got the monthly payroll report tomorrow at 8:30. We got some inventory news. We got a bunch of stuff on the calendar to take a look at it. And I'm expecting to see a relatively small window of opportunity as we finish up this first week of the month. I've got a lot to cover here tonight. Before we jump into those charts, though, I need to remind you, if you're watching me right now on our YouTube channel, don't forget, make sure you subscribe to our YouTube channel if you like the video tonight. Give me a thumbs up if you see value in the content. And don't forget, you can make sure that you never miss another great newsletter by either subscribing to our YouTube channel or heading over to our blog at sidewaysmarkets.com and joining our mailing list. To make sure you never miss another great video, join the mailing list right there on the homepage at sidewaysmarkets.com, and I'll shoot you an email every time I publish something new. And please don't forget, my goal tonight is to get myself and my clients ready for tomorrow's trading session. If you're not going to be with me tomorrow in the trade room, which opens up at 8 o'clock Eastern time, the next best thing is to grab all the charts from tonight's video. I'll put a big button in the description of the YouTube video. I'll also put a big button right below the video tonight on our blog here at Sideways Markets. That way, if you can't be with me tomorrow in the trade room, at least the next best thing is you can have access to all the charts that we'll be using here for tomorrow. And please don't forget, if you have any questions about anything we talk about tonight on the video, right, or if you want to get started as a brand new client, you can always call me in the office. I have a toll-free phone number in the upper right-hand corner. And don't forget, I've got a live support tool where you can chat with us, ask questions, right, or pick up the phone and give us a call. All right, great to be back here with you guys and gals here this evening. I apologize, my videos have been going out a little bit late this week. As you can imagine, I'm been a pretty busy week here this week. So hopefully next week I'll be able to absorb all the incoming traffic and we'll be able to get back to our normal schedule, and I'll get these videos out to you a little bit earlier each evening. Now, jumping into our calendar here for tomorrow, got a lot to cover here tonight. Tomorrow is Friday, January the 4th. Now, most important thing about this, a couple things you want to be aware of here for tomorrow. First of all, it's the end of the first week back in the markets. And if I'm assuming that most people are dealing with everything piling on right now, and I'm assuming there are going to be a lot of human beings out there that are probably going to be easing into this weekend, or maybe I should say excited to get to the weekend right now. I'm sure you and I are probably in the same boat. We've had a busy couple days coming back after break. I'm sure most people are looking forward to finishing early tomorrow. It's a Friday. We know Fridays are always early in, early out. But I want to kind of set the tone by saying that the markets oftentimes take on the personality that we feel inside of us. It's just, as human beings, we're all on the same planet, and we all have, rush hour traffic. We all have dentist appointments to go to. We've all got stuff that kind of all boils up, and there's been a lot of that happening. I've talked to a lot of clients this week. So I would expect tomorrow to be one of those busy ends of the week, and I would expect it to come to an early close tomorrow. On top of that as well, we also have the first Friday of the month. And of course, the first Friday of the month is important because we have non-farm payroll Friday. Now, we just heard from the ADP employment number here this morning at 8:15, and they really had a pretty impressive number this morning at 8:15. In fact, it was the biggest ADP improvement. I think it was almost 10 years, 7-8 years on that ADP number. That's a really big leading indicator for tomorrow morning's news. So we got a lot of eyeballs focused on tomorrow morning at 8:30. In fact, you could look at this schedule and say the only real news tomorrow is that 8:30, right? That 8:30 non-farm payroll number. So it's the first Friday of the month, and it's important that you understand this is one of the biggest news events that we're going to get all month. Non-farm payrolls, you've got GDP numbers, right? You've got the FOMC announcement, you've got the ECB announcement. These are some of those big market-moving events that traders will trade around. They're not going to try to mess with it. What that means for you is when you combine this major news tomorrow with the fact that it's the end of the first week of the year and there's going to be a little feeling of exhaustion in the markets tomorrow, I would again expect this to be a relatively small window of opportunity. In fact, I have met many traders over the years, experienced, successful, consistently profitable traders that refuse to trade on non-farm Friday because they know that it's typically filled with really challenging price action. A lot of traders will skip that non-farm payroll report and they'll simply take the day off on that non-farm Friday and come back the following Monday. Let me leave you with this. Most important thing for tomorrow is that it's going to be a little bit slow before the news comes out. Once the news comes out tomorrow at 8:30 Eastern time, usually the market will get pretty volatile. We've got to be careful trading directly around that news report. So as of 8 o'clock Eastern time tomorrow, right, and then I would say about 8:45 after that news. So you really want to think about, right, kind of putting a buffer around that time tomorrow. Let's just say 8 o'clock Eastern time, and then we'll say 8:45. Right? It's a bigger window, right? Usually what I'll do is I'll take 5 minutes, right? A couple minutes ahead of it, couple minutes after the news. But with this being big news tomorrow, it's just, again, it's going to be important that we, ahead of that news, let's not put on any risk too close to that news report tomorrow. And then most importantly, give it some time after that news comes out, Usually 5 minutes, 10 minutes is enough with this major news tomorrow. I'm going to be expecting about 15 minutes, at least 10 minutes after that news comes out until we start seeing how this market is digesting this. Because this could really be a rocket ship tomorrow. This could really get interesting tomorrow because of that ADP employment number that we saw today. We might see a real strong report here that, of course, is coming from last month, right, the month of December. So very exciting opportunity for tomorrow, but we've got to trade around it. Now, once that news comes out, right, and we get our 10, 15 minutes after that news comes out, be careful because the last few times we've had non-farm Friday, we haven't seen great price action after the news. Remember, a lot of professional traders, they won't even touch non-farm Friday. What do? They come back and they trade what I always call reaction Monday, the Monday after non-farm Friday. So the moral of the story is save your bullets, save your ammunition. Okay, don't force it tomorrow morning if you don't see anything good after that news comes out. And obviously, I'll be with you in the trade room tomorrow at 8 o'clock Eastern time to make sure you're following your rules correctly. But if you're on your own tomorrow morning, be very careful about forcing trades tomorrow morning, because you know what's going to happen, right? If we force trades tomorrow, we're going to spend all of our ammunition tomorrow, save it for the following Monday, right? Because next Monday is probably going to be a much better session for all of us. Now, one more news report tomorrow. They snuck in the weekly inventory report. Now, here is a quiz for you, and I do not know the answer to this. When was the last time a weekly inventory report was released on a Friday? Has it ever been released on a Friday? I'll bet if you go to the EIA.org or the government website, right, that industry website, I'll bet they'll tell you the history of those reports. But I can't even think about those. I can't recall the last time that we had a what is typically a Wednesday news report. I can't even think of the last time that we saw this on a Friday, right? Because of the holiday, everything got pushed back. And I'll tell you, I don't have anything to draw from right now as far as previous experience. Usually the Wednesday report gets pushed back to Thursday, but with the holiday here, it got pushed back all the way to Friday. And again, this is not just any Friday, it's non-farm Friday. Now, personally, I don't think that report's going to be much of a deal. I think you're going to see oil pretty quiet by the time we get to 11 o'clock tomorrow morning. In fact, if I had to guess, I would guess the meat and potatoes tomorrow are going to be between that 9:30, just like we saw today, like I told you last in the newsletter, 9:30 to about 11 o'clock Eastern time is probably going to be the sweet spot for tomorrow. Maybe even a little bit earlier, right? Maybe even that 9:30 to 10:30 like we saw today. We've got to get through the news coming out early tomorrow morning. Don't spend your ammunition, right? Don't go wasting your bullets on lackluster patterns, because we've got Monday right around the corner. And again, right, assuming we do get something, we want to kind of ease off that gas pedal before we get into that 11 o'clock hour tomorrow. It's a Friday morning. It's early in. It's early out. And just some extra cherry on top is that weekly inventory report, which, I mean, you tell me, right? When was the last time that happened? I've never seen it on a Friday before, which tells me a lot of crude traders are probably going to go, all right, 10:30, 10:45, you're going to have to show me something really good late in the day tomorrow. So wrapping things up, I know I'm being a little bit long-winded right now, but again, moral of the story here, I'm expecting to have a relatively early in, early out session tomorrow. Exhaustion in the people behind the candlesticks. We've got the employment number, which may be excessively volatile with that surprise ADP employment report that we saw this morning. And again, with that news, right, that weekly inventory report pushed back, right, to 11 o'clock Eastern time. Early in, early out. Let's grab some charts for now, and we'll talk more about the overall plan tomorrow morning in our trade room. Let's jump into those charts here right now, because we have a lot to cover here tonight. And again, I apologize for being a little bit late here this week on the video. I'm going to make sure we get these out a little bit earlier for us next week. We'll go back to our normal schedule for next week. All right, let's jump right in here. How about some oil? Starting off with oil, then we'll go S&P, Nasdaq, gold, and of course that euro. Right now, over on the oil is bullish with a triangle, a spike and channel, and a measured move on the chart this evening. The bulls have that momentum, that's for sure, which tells me to look for buying opportunities at support levels such as the low of this triangle. It's very, very easy to see that triangle coming down overhead, right, and back up, right? So I know anytime I see a triangle like this, I always know to treat this like a range. And anytime we have a range, what do? We look for failures, try failure patterns, right, back up in. So the bull, right, the bull momentum that we're seeing right now, combine that with the fact that we're inside that range, tells me let's get down to some support levels. Let's let those sellers try once. Let's let them try twice. And then we can buy going back up into that trading range. Also, too, this little spike and channel up here, this cute little guy, right? That spike in channel right there, that's a pretty important clue as well, because, you know, most of the time when we see a spike in channel pattern on the chart, it usually pulls back right about the base of that channel. And as you can see, it lines up beautifully with that battle zone. So the spike in channel is confirming, right, what we already kind of assume here on this chart. We'd like to get that nice deep pullback. And if we do get that nice deep pullback, that will attract those sellers. The sellers will try to reverse the trend, obviously, and we're looking for them to fail so we can buy going back up to retest the high of that spike in channel, and more importantly, back up into that trading range. Now, as far as being a seller right now, what would a sell side opportunity look like? Well, we know what the buyers want. What about the sellers? The key right now is to remember that the market is bullish, right? The overall bullish momentum. So if we are going to be a seller off these highs, we'll need to use a pattern that allows the buyers to try to buy pullbacks, waits for them to fail, and then sells it back down. In a bull market, you almost want to think of it as let the buyers try to do their job first. Give them the free, right? Give them the leeway to do their job first. Watch for them to try, but if you start seeing them to struggle, then you know we can start to turn it against them. Because the hardest part is that unless we see a real strong breakout higher, I've got a triangle here. And anytime I see a triangle, right, this is basically a range. That's all this really is. It's just a trading range. And so we know that a trading range tells us to buy the low using the two-try failure, right? Sell the high, right? Sell the high using the two-try failure, right? We know a range tells us to buy low, sell high, avoid the middle, and use the two-try rule. Use the two-try failure, okay? So we're going to stay away from that middle, right? Stay away from that middle. The middle's going to be nasty. It always is. We already know we'd love to buy 1, 2, failure back up, right? But how do we get short off the high? Getting short off the high is going to be a little bit more tricky as we go higher here. This is why I said let the buyers get it out of their system, right? Let them try to buy this pullback. They might be successful. And if they are successful, then we look for that strong break higher. If we can get that strong break higher, let's grab that trend line here. Let's find that channel. Grab that prior swing, and that's my sweet spot right there, right, for that pullback on the way up to that measured move. So if we can get that strong push through that high, I have no problem being a buyer up here. Just make sure you're aware of where that target is, that measured move of that 48.77. That's going to be a big target there. Again, we got major news tomorrow, so this might all blow out here tomorrow. It's obviously very difficult for me to predict what the news will be and how dramatic the reaction will be. But all things equal, if there wasn't any news tomorrow, that would be, right, an easy plan that we could look forward to tomorrow. But again, I'm getting off track here though. What about the sellers, right? How do we sell this sucker? Well, if we see the market go up, right, and the buyers try to buy the pullback, right? If they run it with success, we can buy the next move, right? We don't want to buy too aggressively up around these highs. So what I'm going to do is I'm going to wait for those buyers to try once. I'm going to wait for them to try twice. And once I see those buyers, again, give them time to, right, get it out of their system, right? Get it out of their system. It's like a little kid, right, having a temper tantrum. Go ahead, right? Squirm all you want, do whatever you want. 5 minutes from now, right, you're gonna be passed out on the floor, right, with your thumb in your mouth. That's exactly right. That's exactly what we're looking for these buyers, right? Maybe not such a dramatic visual on that, but I'm looking for those buyers to try once, let them try twice, and then we'll look for that sell going back down into that trading range. Let the buyers, right, let them try twice, right? Because usually if they try twice and fail, we'll look for that big sell going back down. So pretty easy plan here right now. I want to see it pull back. I want to see those sellers try to sell it again, right? So I can buy it. That'll be a good example of our 1, 2 try failure. Another example would be what I call a two-legged pullback, which would be a strong move down, Then we get back above the trend line. We can use that trend line as support. This is just another way of thinking about that 1-2 try failure pattern, right? Think of it that way. Obviously, too, if we can get that strong move down, what's really going to happen is that moving average will come over. The sellers will try to sell that moving average. That's going to give us that 1-2. Then we know exactly where their stops are, and we can look to buy right into those stops. If we get lucky, we can get a combination set up. If we really get this thing to pull back here, 1-2, we can get off that moving average, get back above the moving average, and we can find that hidden channel pullback, which we talked briefly about to the upside, right? Another buying opportunity there. So it's a 1 try, 2 try, failure. That's the first option. That's usually the one we always get. And then, of course, the second option here is that hidden channel pullback coming off of that low, right? As we go higher here, it's a 1, 2, 3 breakout of this range, very similar to a 1, 2, 3 reversal. Mark up the high, find that channel, that marks our sweet spot, and now we know where I want to be a buyer off of that low. If the buyers can't get it going here, let them try once, let them try twice. Once those buyers try, right, and fail, we can then look for that sell going back down into that range. But again, right, don't force those sell sides right now because the bulls are firmly in control of this market. Don't forget, stay away from that middle, buy those lows, sell those highs, and be ready for some action tomorrow around that non-farm payroll report at 8:30. Let's keep going. How about some S&P here right now? Let's take a gander here at the S&P. S&P is a little bit tricky here tonight. S&P and the Nasdaq, they're going to test our patience tomorrow. You know, with that non-farm payroll number coming out at 8:30 Eastern time. And then most importantly, right, is the way this market is setting up. This chart and the next chart are going to be very important for anyone who's relatively new to trading because we're going to talk more about the market's momentum. The S&P is bearish with a channel and a measured move on the chart tonight. The bears have control, which tells me to look for selling opportunities up at resistance levels. And it's pretty easy to see. You get a beautiful channel here coming off of these, right, coming off these lows. I mean, that's just a beautiful level of resistance up there. That would be ideal, right? That would really be ideal. But one thing that stands out to me on this chart is how wide and how almost flat this channel is. Now, if this is your first time, or maybe you haven't heard me say this before, but the ideal channel is relatively narrow and it's about a 45-degree angle, right? What's a 45-degree angle? Just take a line and draw it from the upper left-hand corner to the lower right-hand corner. That's a 45-degree angle. 45-degree angles, for some reason, they just make for the best, well, maybe not best, but most reliable channels, right? When I have a channel that is not a 45-degree angle, right? When the channel goes like that, okay, what does that tell me? Well, basically, it tells me that the strength of the trend isn't as strong. And when the strength of the trend isn't that strong, when we rotate back up to the high of that channel, the market turns bullish. When you have a relatively steep, relatively narrow channel, the momentum never has a chance to change, right? When the market is relatively strong, we can rotate back and forth, and the bulls, in this example, right, the bear channel, the bulls never really get a chance to grab a hold of it. When we have a flat, very wide channel like this, when we rotate back and forth, by the time we get back to these highs up here, we're bullish, right? I mean, look at that thing. You're going to sell that? That's dangerous, right? Not a very reliable place to sell. So just like we talked about on oil, trying to sell off the high of that bull wedge or that bull range, this is kind of the same basic idea. right? Assume now we rotate back to the high of this channel where I do want to be a seller. I want to sell the high. We're going to get an opportunity to sell off that high. But the problem is using your typical failure pattern isn't going to be very reliable, because a lot of times what will happen is it'll run, right? It'll pull back and it will run through that high. So what I want to do is I want to take kind of a page out of this previous move. Imagine now we go up, back to the high. Because the channel is wide, because the channel is almost flat, right? It gives the buyers a chance to claw their way back into this market. So we have to make sure we let them get it out of their system, right? Let them do it. And like I said about crude oil, right? Let them try once, let them try twice, and look what happens. Once that second try fails, everybody panics and the market collapses. That's exactly the scenario that you want to be thinking when you're trying to absorb the market's momentum. The good news is we don't see wide, flat channels very often, but you can definitely tell, though, we have one right now. We're clearly bearish. There's no question about that. That's very easy to see. We're clearly bearish on this. We've got this nice, right, this nice strong channel down. And so when we combine these together, what does a nice narrow 45-degree channel tell us? It tells us there was a real strong move down, right? The problem is I can't sell the high of this channel right now, because you can see it puts me in a real compromised position. It doesn't really put me in a very good spot to be selling down here. I want to sell back up around these highs. And to do that, I'm going to have to stay patient. I'm going to have to use the appropriate pattern and really ultimately absorb that bullish momentum. So here are a couple scenarios that I'm going to be looking for here tomorrow. One, of course, is going to be, right, if we just sit here going sideways. We have to imagine that with the big news tomorrow morning, a little bit of exhaustion among the traders in the market right now, we have to assume this market may go sideways here, right, in the overnight session. If we get the market going sideways in the overnight, that's going to negate any real bullish momentum, and it will give us a little bit more confidence to be a little bit more aggressive selling down here. But it's got to go sideways here first. If we can get it to go sideways here first, what I'm looking for now is anytime we have a trading range, what do we focus on? The two-try rule, the two-try failure pattern. That means we want to go up, let those buyers try once, right? We're not worried about that excessive bull momentum at this point, so we don't have to worry about a nested two-try. I can wait for a 1, I can wait for a 2, and once I have those buyers trying once, trying twice, I can sell that sucker once I see the second try start to fail. So a trading range environment, very, very easy to trade. Hopefully we get that. That wouldn't be a bad scenario at all. It'd make our job relatively easy. The more difficult environment's going to be if we do get that correction, right? If we do get that correction going higher, again, it's going to look very, very bullish as it goes back to retest those highs, right? You're going to see a 1, 2, 3 reversal. It'll look just like this one probably, right? Sellers will bail on it. Price will run higher. And at that point now, again, it's all buyers right now, but we don't want to buy into the high of that channel. Right? I'm anticipating that right when the buyers start drinking the Kool-Aid, once they start looking to buy the pullback, right, what's going to happen is you're going to see one pullback. That first pullback will probably not be enough. There'll be buyers waiting to buy again for a second attempt. That's why I wouldn't recommend your typical failure pattern off that high. I'll wait for them to try once. I'll wait for them to try twice. It took me a long time to learn that little lesson right there. Trying to sell into a bull market by using a simple, right, reversal or failure pattern will get you in trouble. When the market momentum is bullish, you've got to let them try a couple times, just like we saw back here. Up once, twice, and then bam, you can see they just let it collapse back down again, because the buyers only have so many bullets in the gun, right? They're not going to keep trying to force it. Once we see them try twice and fail that second time, most buyers are going to close their positions, or better yet, reverse their position, and this price will collapse back down again. It's that two-try failure pattern, right? Now, and remember, I'm covering all of what the patterns I'm looking for tomorrow morning in our trade room. If you're not going to be with me tomorrow in the trade room, or if you just want to get a deeper dive into all of these patterns, I have a great free trading course. I'll put a link up here in the upper right-hand corner. You'll see a little button will pop up there in the upper right-hand corner. I'll also put a big red button below this video tonight on our blog. Grab that free trading class. If you want to learn more about all the entry patterns that I'm using, if you want to learn more about all my favorite technical analysis tools, if you want to see real examples directly from our trade room of all of our favorite entry patterns, again, grab that free class. There's an information icon in the upper right hand corner, right? And again, it's linked up right below the video tonight, right on our blog here. Big red button that says free trading class. That will teach you all the basics. And again, you'll see hundreds of examples of my favorite entry patterns. Now, before we jump into the Nasdaq, how would we look to be a buyer here? Right? What would be looking for here for a buy? Well, if you want to be aggressive with it, you can look for that as we go higher here. I wouldn't take the first one, but that little trap below that low, if you want to be aggressive with it, that would be one. Not really my cup of tea, right? But that will be one. You know, again, you're anticipating that sellers are going to try to sell off this high. So one way to be a buyer on this market is to wear a helmet, because it's going to be a little bit rocky, right? But buy that second attempt. In other words, what literally is going to be is, it's going to literally be just one big trap candle, right? It'll be a green candle coming right off that low, launching back high. Again, you're still going to be buying right into that high of that channel, right? But the momentum will be bullish, and so you're more than welcome to take a swing at that. A little bit lower probability, but definitely a good potential for that price to rise higher. What I'm going to look for here is I'm going to wait for that second leg to make its move, show me it means it. Then I'm going to go out, I'm going to mark up those highs up to that low, and then I'd like to be able to use that trend line, just like we talked about on gold, if you recall from last night's newsletter, where we used that trend line not as resistance, but as support. That's where the bread and butter is going to be tomorrow. If we can get up above that trend line and then be able to use it as support, now we're talking. That's going to be the most reliable pattern there, right, for those bulls. So you're more than welcome to look for that trap below that low, right? If you like a little bit of danger, if you're one of those weirdos that likes to look over the edge of the bridge, right, or wooden roller coasters, right? If you like a little bit of danger in your life, that might be something you're interested in. I'm more interested in reliable opportunities, so I'll wait to get through that high and then use it on the other end. Great chart there on the S&P here tonight. Remember, we got big news tomorrow at 8:30, right? So give it some time. How about some Nasdaq? Nasdaq is very similar here to the S&P, right? Nasdaq is bearish with a channel, a measured move, and a previous low on the chart tonight. The bears have the momentum, obviously, right? We're clearly bearish here right now on that Nasdaq. So my plan is to sell at resistance levels overhead. And I really love the way that this battle zone, right, this prior swing, I really like the way that this battle zone lines up right with the top of that channel. This is really a great spot up here. And as you can see, it's not as extreme as the S&P, right? Look at the S&P again. The S&P is much wider of a channel. There's a lot more space to cover on the S&P, right? When the S&P runs back up to the high of its channel, it's going to be very, very bullish at that time. This not as bad. You can still see that same pattern example that I talked about, right? We run up, we get the 1, we get the 2, right? It's that nested version, right, of the 2-try failure, and then all hell breaks loose, right, as that market drops back down again. That's very, very similar to what we're looking for here tomorrow. What I will be open-minded to, though, is a little bit more aggressive entry on this. For example, if we draw a trend line right across those lows, you can see that two-legged pullback up, back, and go. That is definitely something I'm keeping my eye on here on the Nasdaq tomorrow. And the reason why is because it's not as extreme, right? It's not as extreme as that wider variation of this on the S&P. So if we think about this in terms of, right, the current market, 1, 2, go, that's your 1, that's your 2, right? We're using that trend line as that key level of resistance. We call these two-legged pullbacks because the way they run with that 1, 2, that creates that support trend line, and then we use the support trend line as that level of resistance. If I don't get that, though, if we don't get that, right, we'll look for that 1, we'll look for that 2, and again, very similar. We're going to look for that 1 try, that 2 try. Let those buyers try, and then we'll sell into those stop losses, just like we see many examples of those already, right? Great example there, great example there. We go up, 1, 2, collapse. We go up, 1, 2, collapse. Same basic idea for tomorrow. Don't forget to keep your eyes open on that trading range. It will not surprise us whatsoever if we sit here going sideways. If we do go sideways, we're looking for that 1 try, that 2 try, and we'll sell into that buyer 2 try failure pattern. We'll talk more about that tomorrow once we see the size of that trading range. And then what would a buy look like? A buy would be pretty simple, right? Again, we want to see the bulls take control, and we want to try to use that trend line, right? Use what is resistance, but use it as support. And if we learned one thing from the example on gold this morning, what was it? Patience. Patience, 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 right? If you go back and look at the chart from last night's newsletter on gold, remember what happened? It collapsed back down, it ran back up, and then sure enough, it came back to let those buyers come in. So don't give up on it if you don't get it right away. But if we see it eventually push through, nice strong move up, nice strong move up, right? Nice strong move through. That's what I'm talking about, right? Nice strong move through. It's obvious these buyers aren't giving up on it. Buy off that low, right? Or buy off that trend line using it as support. And then a big target up around that 64.09, right? That's not today, right? But yesterday's high as we try to make a run back up to retest those highs. Could be a nice short covering rally coming off this low if we get the turn in that momentum. Nasdaq is looking great here. How about some gold, right? Gold, like I mentioned last night, gold was relatively easy to see that coming a mile away. That strong move up, right? That strong move up. And of course, they finally found their way, right? Finally found their way. And as we talked about last night on the newsletter, right, it was 2 tries for those sellers before they finally took this price and ran it higher. I love it when a plan comes together. Looking at bulls here for tomorrow, right? Gold is bullish with a channel, a hidden channel, a measured move, and a round number on the chart for tomorrow. The bulls have control, which tells me to look for buying opportunities at support levels, such as the low of this channel. Now, which channel, right? Which channel? There's a couple channels here on this chart, right? I've got this channel. Let's just do this for a second here. Let me get that out of the way here so that it doesn't kind of doesn't cloud our vision on this. One of them, right? One channel is this one, right? Now this channel is very much speculation at this point. I'm relying on those 2 highs, which line up nicely with those 2 lows, and you can see it really fits like a glove. Now this may be one of those scenarios where it's a wide channel, but notice, yeah, 45 degrees, right? It's a wide channel, but it's not a flat channel. So wide channels are okay as long as they're not that flat, right? Because wide channels, plenty of room to run now. Oftentimes though, when you see a wide channel like this, you want to add that midline. Add that midline and think of it almost like a channel inside of a channel. So my goal will be to try to look for buys at the low of that, right, of that channel as we go higher. And that's one channel I'm watching right now, right? What I really want, what I hope we get here is, if I can adjust this one, let's do this. Let's get rid of that for a second. This is what I really want for tomorrow. Hopefully we get a pullback on this and I can get this off of that low. That hidden channel, that's the good stuff here for tomorrow. Hopefully we get a pullback before we get back to that measured move and that big round number. But that hidden channel, toss a midline on it, that's a beautiful opportunity to buy off of that low. Nice deep pullback, right? Get that nice deep pullback. As we pull back, right? Let's just, and again, we may not get it. This gold market, everyone's all freaking out about this correction in the equities right now. It makes an experienced trader kind of makes me want to scream sometimes, because it's like, hello, it's a 10-year bull run. Like, what are we all worried about this pullback for? We should be happy about this pullback right now. This pullback gives everybody a chance to reload the accounts again. There's nothing to worry about with this correction. We should be celebrating this right now. There should be a monument built for the bear market, right? Because it's got to happen at some point. We got 10 years of a bull market right now. Anyways, long story short, makes me want to pull my hair out. Everybody worried about this correction. It's like, for crying out loud, just pull back so we can buy the dip and let's get back to the bull side again. Bottom line is, everyone's freaking out right now about the pullback in this 10-year bull market. Open a chart, look at a chart. Anyways, that's what's causing gold, right, to make this rise higher here, as if the world's coming to an end. Anyways, I'm gonna get off my soapbox and finish up this newsletter. But anyways, that's what's sending price higher here. It's just blind foolishness is really all it is. Anybody who knows they're doing knows this is a great thing for the markets right now. Get this pullback, stop crying about it, right? And you can cry about all you want, but it's a good thing for us to get this pullback. It's not the end of the world, right? We'll get through it. Hopefully, though, we get a pullback on gold. Hopefully, we get that pullback on gold, right? Let's get this market to pull back. Once we pull back, I've got my eyes on that low of that channel. But remember, right, when we pull back, we're going to go right below that moving average. And as we go below the moving average, now we can look for those sellers to try to sell that pullback. If we can get those bears to sell that pullback now we know where their stops are. Now we know we got stops hanging out right above that high. And so all I have to do now is wait for that second try to fail, and I can buy right into their stops. I'm buying low, I'm buying off support, I'm buying right into the exits of those sellers. When sellers get stopped out, they become buyers as well. This is just a 2-try, 1-2 failure pattern. Then, hopefully we get that pullback, we can get that new high to high, off that low. That creates the sweet spot for that hidden channel pullback and a nice follow-up, right, as we go. Another option would be, maybe it's a 2-legged pullback, right? Maybe it's a 1, 2, draw the trend line down, 1, 2, right? Buy off that trend line support, right? We've talked about that pattern already. 2-legged pullbacks, 2-try failures, hidden channel pullbacks. Again, like I mentioned earlier, that information icon in the upper right-hand corner, if you want to learn all about my favorite entry patterns, see literally hundreds of examples directly from our trade room, you can grab that free trading class in the upper right hand corner, or below the video tonight you'll find that big red button to register for that free class as well. Now, if we keep going on this, right, if we keep going on this and we don't get that pullback, right, if we keep going on this, we're going to run out of space. I've got that measured move. It's just a few points overhead here. The big round number at 1,300. We have to assume that is the big objective right now, especially as we go into non-farm Friday tomorrow. So we have to assume, right? We have to assume that as we start going higher, buyers are going to be hesitant to keep buying up here. Now, what's the rule of thumb? What do we want to do anytime we want to buy, but we're too high to buy? What do we look for? Traps, right? Traps. We mark that low. We mark that low. We mark that low. Anytime I don't have enough room to buy before we run into resistance in a bull market, I look left, I find those prior swings, and I look for traps. I look for that market to pull back into support below a prior swing, and usually these traps, good example right here, right? Small little poke its head right below that prior swing, and buyers are racing back higher. It also helped in that example to have that trend line we talked about, right, in last night's newsletter waiting there as well. But that is some powerful stuff. And again, anytime we have a situation where we're bullish, but we're running out of open space up there, I don't want to buy high, I want to buy low, and the easiest way to buy low, especially in a blindly bullish market like gold right now. I apologize for that rant earlier on. It's been a busy week here, right? I'm going to look for those traps. I'm going to look for that trap low, right, and get that price back up. Now, if we go higher here without a pullback, right, and we end up sitting around that big round number, don't be surprised here if tomorrow is a range around that 1300. Non-farm payroll Friday is notorious for being a very difficult day on gold. And like I said earlier, save your bullets for next Monday if it's not moving well, because next Monday will be a much easier day to trade, be a full session on Monday without the distraction of the first Friday of the new year. If we get that trading range up there, what do? Two try, failure pattern, right? Two try, failure pattern. Let those bears try once. Let them try twice. It's going to feel like this market's going to collapse. It's going to feel like it. I'm telling you right now. It's going to feel like that second try is going to feel like it's never going to come back. It'll look like that, right? It'll go one, it'll go two, and then whoop, right back up. Once we see that signal above the moving average, bingo, right back up into that range. All right, that's the plan for tomorrow for the bull side. Looking good here on the gold, and then of course wrapping up here on the mighty euro. How could we forget? I could never forget you, euro. What's the euro up to here tonight? Euro is bullish with a trading range, a channel, a measured move, and a round number on the chart tonight. The bulls have the momentum, which tells me I should focus on buying at support levels, such as the low of this bull channel, which lines up nicely with the range expansion support levels. I also need to avoid buying as price pushes higher because we have the measured move resistance level along with that big round number at 15,000, just a few points overhead. It's pretty easy to see the buyers have control. The most important clue right now is this trading range. Repeat after me. Ranges always take precedence. Anytime I have a range on that chart, the range takes center stage. Okay, so if I have a range and a channel on a chart, what's more important? The range. Okay, the range is more important. You will see many times where when a market is trending and then it goes sideways in a range, focus on trading that range. Everything else becomes secondary. Now, the good news about this particular range, if I take that range and I copy and paste it down, the size of that range, the size of that range, it brings support here, it brings resistance here, right? Support and resistance above and below. That support level is critical because look where it lines up. It lines up beautifully with the low of that channel. Now again, ranges take center stage, but if I can line up the range expansion level, critical support, along with the low of this channel, I mean, that's just a beautiful opportunity down there. And of course, anytime we have a trading range, we know we're focused on what? On that two try failure. That one, that two, that back up we go. Right? So two try failure pattern. Let those bears try once, let them try twice. Right? Now we know those sellers are in. Look for them to fail, right? Once we see that sucker start to fail, we're jumping in back up to retest the high. Very important for tomorrow though, main target is back up to the retest of the high of that range, but leave that runner, that 15,000 big tasty target we talked about in last night's newsletter, it's just winking at us right now, saying come and get me, right, up at 15,000. We definitely know that's where the buyers, right, are trying to go right now. Now, speaking of buyers, what if we don't pull back? Right? What if we don't pull back, right? What if we keep going higher here? What if we keep grinding higher? Then what do we do? Well, remember, anytime I'm running out of space and I don't want to buy high, what do? We look for traps, right? Trap pattern, finish off that move. Or maybe we don't get a good reaction to a prior swing. Maybe it pulls all the way back. If it pulls all the way back now on those lows, one try, two try, failure, right? And we're buying into those, right? Buying into those stops, right? We're letting those sellers try to sell off that moving average, and we're going to try to buy, right? We'll wait for them to try to sell it, buy right into the stops for that move, going back up to retest that, right? That big round number. Don't forget, stay out of that middle, right? If we sit here and go sideways, you sit on hands, wait for that 1, 2, and back up. And of course, tomorrow, again, much like on gold, euro is one of those markets that is always a bit nasty on non-farm payrolls. Anything related to the US dollar, currencies, metals tomorrow are going to be a very sloppy session right around that non-farm payroll report. How do we turn bearish tomorrow? Right? Very important that we talk about that, because who knows? This could reverse. What would a reversal look like? The 1, 2, 3 reversal, right? What does that look like here? Well, look what happened back here. We saw a strong move down, right? We pulled back to the moving average, and what happened? Sellers tried to sell it, and they failed. Okay? If the sellers would have held that pullback and run off that moving average, that would be a 1, 2, 3 reversal. It takes a strong move against the trend. It takes a pullback to the moving average. And then it takes an explosive move off the moving average. Now, it's very tempting to want to sell that move, right? Sell that pullback. But the reality is that's not a reliable sell. What's more reliable at that stage in the game, with the bullish momentum being in control, is for us to use the failure pattern 1, 2 and look to be a buyer instead. But if those sellers can really run this sucker off of that moving average, creating some separation away from that moving average, now I can look for a sell. I'm going to mark up that prior swing. I'm going to mark up those lows, find that hidden channel. Now we know where our sweet spot is, and we can sell off the high of that channel. Where's my target? Back down to retest that 13,800. I'll be very surprised if that happens before the news comes out tomorrow. I would imagine the news tomorrow will probably be the catalyst that would result in that reversal. Right now, I've got my eyes on that big round number at 15,000. Guys, wrapping up here tonight, I want to thank you so much for putting up with me here this week. I know, as you can tell, I've been testing out a new microphone on our newsletter. I've been testing out a new formula, a new format for the newsletter. And of course, been a busy, busy week. These videos have been going out a little bit later. I'm working on some great new stuff for our YouTube channel and our blog here at Sideways Markets. And this is just scratching the surface of what's coming in 2019. Don't forget, we got one of the best free trials on the interwebs. You can take that free trial and join our trade room as a guest by following that big button on the homepage. You can always call me anytime you have any questions in the office. I always have live support hooked up right to my cell phone. And don't forget, we have 3 levels of membership: beginner, intermediate, and advanced. These are all-inclusive lifetime memberships. Start with the beginner, work your way up to the advanced, or take the plunge and join me tomorrow as a member in the trade room as a brand new advanced member. I'm here standing by if you have any questions. Tomorrow morning, we're back in the action at 8 o'clock Eastern time. There's no newsletter on Friday afternoons, so the next time you're going to hear from me is next Monday afternoon. Have yourselves a wonderful, wonderful weekend if I don't see you guys tomorrow in the trade room. And as always, like I said before, right, on Non-Farm Friday, save your bullets tomorrow, because Reaction Monday is only a few days away. Guys, my name is Joseph. Thank you for being here tonight. Be well out there. Be nice to each other, will ya? And be here tomorrow. Adios, amigos. Bye-bye for now.